Jonathan Kreizman is an analyst at Clal Finance Brokerage, and he joins us live from the Tel Aviv Stock Exchange. Welcome to the programme. You have a neutral recommendation on Teva. Why is that?
Hi. Yeah, we have a neutral recommendation in Teva, basically because we believe that the generic industry in which Teva is a market leader is declining in the next few years. And Teva's main opportunities in the generic industry are behind it. Secondly, Teva's earnings rely, actually over 50% of Teva's earnings rely on one single drug, the Copaxone, a multiple sclerosis bestseller. And we expect the Copaxone to go generic in the next few years, therefore undermining Teva's EPS in the upcoming years.
And did the plans for a shared buyback do anything to restore your confidence in the company?
We think the buyback is technically inflating EPS for the next 2 or 3 years, but surely not covering the fundamental problems with the lack of growth in the generic industry in upcoming years.
We want to get your thoughts as well on Mellanox, if we can. Now, this is a tech company. Its shares are up more than 30% this year, but fell sharply on Wednesday after Oracle's earnings disappointed. Oracle owns about 10% of Mellanox. Is this a worry for investors?
So I think the main worry here is Oracle by itself as a bellwether in the industry. Mellanox's relation with Oracle is quite strategic in terms of the 10% holdings of Oracle in Mellanox. But in terms of business itself, only about 10% of Mellanox revenues are actually coming from Oracle. And we don't expect Oracle to actually become much more than that in 2012. Therefore, a weaker performance by Oracle into next year would not necessarily impact Mellanox growth by that much. We believe the sell-off yesterday was not necessarily correlative with Oracle's revenues, actually Mellanox revenues from Oracle, but more with a general sell-off of high multiple tech stocks like Citrix, F5, Riverbed and Mellanox as being part of this peer.
Well, the picture's not great, has it been this year for the Israeli stock market as a whole? The main Israeli index is down by what, about 17% this year. To what extent is that decline down to events outside Israel? So,
first of all, it's important to know that the Israeli market was an outperformer in the year before. So I think the entry point to 2011 was quite high. Secondly, obviously we have been facing some sovereign risks associated with Israel and geopolitical issues which maybe were less evident before the uprising in Egypt beginning of 2011. A second issue was a kind of social uprising in Israel which began this summer, which basically undermined many of the large, well-earning companies in Israel, and reforms, regulatory reforms within many companies have had a very harsh effect on most of the sectors.
Jonathan Kreizman, analyst at Clal Finance Brokerage in Tel Aviv. I'm grateful to you. Thanks very much.